All right. Welcome, everybody, to another edition of PPP seminars from Tag Employer Services and eBacon. My name is Nate Kern. I'm the Director of Marketing here with eBacon. And today, our main presenter is going to be Jason Knight, who's the Director of Operations, which many of our clients are very familiar with. He is our uh, resident guru on all things SBA and PPP right now. And so we're going to go through the most recent guidance that came out from the SBA as regarding the loan application and a couple other topics. And so just a couple housekeeping things. We are going to be answering questions actually during the presentation. So as you have them, if you could type in those questions either into the question area or the chat, we will try to get through those while we're on that topic and have hopefully have a little bit more context around those questions rather than waiting to the end. So please feel free to send those at any point in time during the presentation. As always, if you can keep your microphones on mute, it makes the experience better for everybody. So with that, let's go through the agenda. There we go. Now we got it. So we're going to talk about the PPP FA, which is the Flexibility Act that was just announced earlier this month. We'll talk through what that does and how it modifies the CARES Act, in particular the PPP program. We'll dive into that bill. We'll look at some of that guidance, and then we'll actually take a look at just what it's going to take to do the loan forgiveness, and from the clients that are joining us today, kind of how we're going to be helping you out. Again, questions are going to be open kind of any point in time, so please feel free to join in. So with that, Jason, I'm going to kick it over to you and let you get started.
All right, perfect. Thanks, Nate. And yeah, you said it earlier, the next edition of this, and it made me think, how often do we have to do these because of updates on the same topic, really? And there's likely to be another one potentially in the future here, because as much as we've gotten some new clarity and some guidance on even this latest piece of legislation, there's other stuff that is likely to come out in the coming weeks. So um, I doubt this is probably the last one.
Yeah. Well,
We'll
it's kind of interesting, Jason, not to cut you off, but I mean, you and I were talking about earlier that as kind of the economic impacts and people kind of are understanding it, these new laws and guidance are really changing some of that initial intent.
Yeah, the initial bill, I think everybody was pretty clear on the initial bill when the CARES Act got passed. The whole purpose of the loans were to get your employees, still working and pay them basically what you were before, and it was almost a way to alleviate some of the pressure on the unemployment system, right? Because everybody was going to have to run to the unemployment, and that was going to be insane. And so they said, okay, we're going to give this money to the employers. You guys get your employees back to work and pay them. Even if they weren't actually doing any work, the intention was pay them the full amount. And I think, again, on its face, that sounded great until things started to roll down, a few weeks or a month or so. People started having money in their bank account. And then it started to raise questions like, well, but this doesn't make sense. It's not the best time for me to use the money. I'd rather use it down the road, or it just was all over the place. And a lot of that pressure clearly found its way back to Washington because this law, this PPPFA is the acronym for it, has dramatically changed the intention of the original CARES Act, or the PPP provision of the CARES Act. And it is now still focused on the employee in the sense of the primary amount of the money should be used towards payroll and everything, but it is given a huge tilt to the employer in the sense of you get to kind of manage how this works now instead of it just being so forced on you of how to use it, when to use it, etc. It gives the employers a lot more say in how they use it, when they use it, and how that impacts their business. So yeah, it has definitely changed the tone of the law altogether. So that's probably a good place to start then, going into a little more detail, or I guess we can start with highlights, but HR 7010 as it's known, or the Payroll or Paycheck Protection Program Flexibility Act. Again, we're going to use PPPFA throughout this. So if you have questions in the future, if you hear that in the future, that's what we're talking about. But there's really 5 main elements to it, and they're there on the side about the length of the loan, the covered period, the payroll cost requirement, the deferral of the uh, repayment date, and the ability to participate in the deferral of employer social security taxes. Now, this will impact everybody that has a PPP loan, even if you opt to use the original 8-week rules. There are other aspects of the law that still impact everybody out there. So this is relevant for everybody. So that's just a quick highlight, and now we'll get into some of the details here. So with the covered period, actually, you know what? I don't think we cover the loan duration in a separate slide.
Um, I believe we do, but we can touch on it here and we can touch on it again.
Okay, we'll continue like this. If it's not, we'll just bring it back up. So covered period, the big in again sweeping change of this is increased it from 8 weeks to 24 weeks. If you received your loan prior to June 5th, you get the option to use the 8-week covered period instead of the 24-week covered period. If you got your loan after or on or after June 5th, you do not have the option. Only 24 weeks applies to you. So that is pretty significant. The pro to that clearly is that you have a longer period of time to use the money, in which I think is very clear to everybody. But one of the things that wasn't really clear in the very beginning, and they did provide guidance on it, is it also increased the amount on a per individual basis that applies to forgiveness. So under an 8-week scenario, when you have $100,000 annualized pay under over 8 weeks, that's only $15,385. But over a 24-week period, that's $46,154. So that does become very material because it allows you to surpass the old 15,385 cap that everybody was so concerned about. So again, it doesn't change the $100,000 annualized threshold, but it does change the actual dollars applicable to each individual employee. So that's very significant. They also did add some clarity to the owner's compensation. They pulled it out of the employee calculations that we're seeing there on the left-hand side of the screen, and now it has its very specific calculations just for the employer. Not notably different, obviously. In the 8 weeks, it's still the 15,385 up to the $100,000, and this is based on your net profit of 2019. So if you made a profit in 2019, if it was over 100,000, you're capped at the 15,385. If it was under 100,000, then whatever that dollar amount equals. If you actually had a loss in 2019, then you get no benefit as an employer for those dollars because you can't forgive something when it's negative in this case. But unlike the employee, the employer for the 24-week covered period only goes up to 20,833. This is the new calculation that you see on the screen there. So it's 2.5 months, which makes sense. Everybody remembers the 2.5 month thing of 19,000 or 2019 net profit up to the 20,833. So that's very significant because it's a far cry from the 46,000 number that they used for the employee side. So that's the most significant elements of the covered period. Forgiveness date. The safe harbor has changed. Everybody was counting on that June 30th, or it was planning around that June 30th, 2020 date as the date that they had to restore employment and salaries, wages to their furloughed employees or their laid off employees and still qualify for full forgiveness. They changed that to December 31st. So that is a very significant change. Now, where that scares some people is that, well, do I now have to hold on to my employees all the way through the end of the year? Otherwise, I'm going to wind up having forgiveness reductions. And the answer on the original law itself kind of said, yes, that's the way this is going to work. But once the application came out, they gave some really nice clarity. And there's wording that you can use the date that you are submitting the application as your safe harbor date for the comparisons and the calculations of the safe harbor. So while yes, December 31st replaces June 30th, the application has made it very clear, at least up to this point, that but whatever date you're submitting your application is your date that you're really going to use to determine your safe harbor. So again, very significant, because if everybody's was forced to keep their employees all the way through December 31st or rehire them at December 31st, et cetera, that was going to have obviously a very different impact than if I only need to essentially use 10 weeks of the 24 or 14 weeks of the 24 weeks, and then I used all my money and I just want to submit my application at that point. So that becomes very material there.
Jason, just real quick, we
Yeah.
have some questions on the cover period.
Okay.
And so if we can maybe go back to that slide. The first one is, again, how do we really determine what that cover period really, like, how do you determine when is the 8-week or the 24-week cover period begin and end? How do you determine that?
Okay. So the covered period begins the date that you get your money, the date that like gets deposited into your bank account. If you get multiple deposits, it's the date of the first deposit is the start of your covered period. So that is, let's just say that's a Friday. Well, the end of your week would be the next Thursday, and so you just count out 8 Thursdays in the future or 24 Thursdays in the future if you're using the 24 week, and that is how you determine and identify what the covered period is. So it's either 8 weeks from the date ending again the Thursday, or 24 weeks. I have seen people miss it by a day. They keep counting out like from Friday to Friday to Friday to Friday. Well, the day you got it is inclusive, so it's really Friday to Thursday, Friday to Thursday. So that's most of the time when people make a mistake, they're usually off by a day, but a day can be material. So I want to make sure that we note that. So
And there is like a concept out there of the alternative covered period as well, right? Or and that's basically where you could start it on the next pay period, at the beginning of the next pay period after you receive those funds, correct?
that is correct. So that's the alternate payroll covered period.
Yep.
And that was defined. It becomes less obviously significant if you're using the 24 weeks, but still very significant if you're going to elect for the 8 weeks. But yes, that is the first day of the first pay period, not the check date, but the first pay period, first day of the first pay period after you received your money. So that is your alternate covered period. I don't know if it's going to be that significant for most people. It only applies to clients or for employers that pay on a weekly or a bi-weekly basis. If you pay semi-monthly or monthly, it does not apply to you, the alternate covered period. So, but the covered period applies to everybody. Good
Cool.
point. Thank you.
And then for when we talk about employers, can you talk just a little bit of the difference between the C Corp or a C corp owner versus an S corp or a sole proprietor on how
Yeah.
it is.
So owner compensation, for the most part, that is applicable more to things that are passed through. So whether it's a sole proprietor or an S corp or something of that nature, if it's a C corp, they do treat it more like a true employee. Uh, we would have to look at some of the specific details for that, but like for instance, you get to still utilize health insurance. Premiums are applicable for employers if they're under a C corp and get paid under the C corp because they are truly separate from the corporation. But if they're paid under a S corp, it's inclusive in their wages or their net profit anyway. So yeah, there is a bit of a difference from a C corp. What we've identified here probably is more clearly said for like an owner operator that or an owner employee of an S corp or something of that nature. So,
So if they're a W-2, then they would fall underneath kind of that 24-week maximum of 46,154. Then is that
uh,
kind of how we've seen it so far?
yeah, I would say that that's probably a fair way to summarize it because if you're not a W-2, then you're going to get a K-1 or those kind of things, and then that works very differently. So yeah, if you're getting a W-2 through your company, you're probably more likely to fall to the employee scenario. But again, depending on the nuances of your ownership, the corporation, et cetera, um, that you might be still subject to those that owner limitation. So if you have a scenario like that, I would say let's talk about that kind of offline and verify how it applies to that person in particular. This is a little bit more general, yes, as far as the slide is concerned here.
Yeah, and then there are quite a few questions around if there's a percent ownership or what is the definition of an owner, and I'm not sure that we've had or how our distributions um, treated versus salary. I'm not sure that we've gotten a whole lot of clarification around that, have we?
So there is nothing that specifically identifies like 5% owner, 10% owner, et cetera, as what is considered owner compensate, considered owner for the owner compensation calculation. So right now, the definition, what I'm hearing attorneys, et cetera, kind of talk to is if you have any ownership, you're an owner. We usually get a lot of clarification, especially in the tax world and legal world, regarding you know um, ownership percentages and when it's applicable, et cetera. They have not clarified that at all in this regard. So the assumption, the I guess you could call it the conservative approach to it, is that they're looking at it as if you have uh, any percentage ownership, you're considered an owner.
One more question. I think we kind of talked about this, but maybe just to kind of clarify. So um, the 8 week or the 24-week cover period, those are kind of those are the baselines for the calculations. But you can submit your loan application or your loan forgiveness application at any point in time, and that becomes your new safe harbor date. Is that
Correct.
okay? Okay.
Yes. So yeah, the baseline for if you pick the 8 week covered period, if you're prior to 6/5, or if you're on the 24-week covered period, that is the period of time which you have to quote unquote spend the funds, right? So whether it's on payroll costs or even rent, utilities, etc., that's the period of time in which those expenses and things have to incur or be paid. But once you hit your number, you don't have to wait to the very end. Now, we're going to get into this a little bit later, because so much is changing and almost every time it seems to be in favor of the employer lately. You don't have to race into anything to make a decision and start to submit. So you can look at it as, well, even though I've finished, I don't necessarily have to submit it the next day or the next week. So
Right. Cool. All right. I think that answers most of the questions that we have on that. If there's others,
perfect.
please. Yeah.
Perfect.
And we
And
can
we can
always
always
come back to
catch anything else at the end. So it doesn't
that.
mean just
Absolutely.
because we go past the section that we can't address it. But I do like addressing them kind of when we're on that topic. So I like this format better.
Yep. Yep.
But yeah, anybody that if you think of anything else after the fact, we'll always, we'll cover things at the end as well. So you're not going to miss out. So was there anything regarding the full forgiveness, the safe harbor dates, stuff like that?
Just that if you, let me just ask the question here. Can you use the last day of the covered period instead of the forgiveness application date as the safe harbor date? So even if you file it early, can you still use the 31st? I guess, you'd have to wait until the 31st if you're going to use that day. Is that correct?
You mean December 31st?
December 31st. Excuse me. Yes, December 31st.
Yeah, you would need, you couldn't submit it prior to December 31st and say you're using December 31st, obviously, because that date hasn't occurred yet. So you would have to wait till after December 31st and then utilize that date.
Okay.
Which kind of goes back to my point that you got plenty of time before you have to submit these things. So even if you're done 2 months earlier or whatever, you still can wait till December 31st and use that date. So yeah, you got plenty of time. So, all right, good. Let's see here. So changes to the payroll costs and what has to be used for payroll. So this was not covered in the original CARES Act itself. U.S. Treasury came in and said, okay, but we're going to mandate that at least 75% of the loan be utilized to cover payroll costs as defined by the act. So that was something that came as advice after the fact, not the original statute. Apparently, Congress didn't really like that. And so during or inside of the PPPFA, they specifically said, yeah, 75% is out. We're going to reduce that to 60%. So now up to 40% of the forgiveness amount can be used for rent, utilities, mortgage interest, should I say. Now, that sounds very, impactful. I think it's a little less of an impact simply because you have so much longer to use on the payroll cost side. So it becomes less significant. But if you're on the 8 weeks or something of that nature and you were just going to be shy, but you could make it up in rent or whatever, then having the 60% number is definitely a nice thing. So they did, again, just another example of loosening it up, probably not as relevant because of the expansion to the 24 weeks, but just another example of Congress saying, yeah, no, we're making this more friendly for the employers to be able to get full forgiveness. So, and then secondly, payments are automatically deferred until the SBA remits the forgiveness. So the original law said 6 months. So everybody, had to submit or as soon as their 8 weeks was done, try to get your submission in, because in 6 months' time, and frankly, the process could easily take 6 months, if not longer. And I can explain why. The lender is the first person or the first place that has to approve the forgiveness application, and they have 60 days. But if they ask for additional information, their 60 days starts over. So they could have had your application for 40 days, ask for a bit of information. Now they have 60. They could have it for another 40 days, ask for something else, and now they get another 60. So that process could be very lengthy. Once they approve it, though, then it gets sent over to the SBA, and they have to approve it as well. They have 90 days. I have not heard of any extensions that they're allowed to make on their side. But this, again, could be a very lengthy process. So 6 months, you could be, butting up to 6 months very easily. So the PPPFA said, yeah, you know what, we're going to make it automatically deferred until the SBA remits forgiveness amounts of the money to the lender. So if that takes 8 months, we don't care. If it takes 10 months, we don't care. you don't have to pay a penny until the money is given to the lender. And only then do you have to pay on any part that wasn't forgiven. If, however, you don't submit an application for forgiveness, you have 10 months before you have to start repaying that money. So it's an automatic 10-month extension, or if you submit until the date that the SBA sends the money to the lender. So again, a huge difference there. So it really means that you got plenty of time to submit your application, and you don't have any pressure on the hindsight after you submit it as to, well, I'm going to have to start making payments. So I need to get this in very quickly. Not a concern any longer. So any questions, Nate?
So yeah, so there's, I guess, using the 60%. So on that, so I guess it's on the application itself. There's a question on that. It's saying it's dividing by 60%, but shouldn't it be multiplied by 0.6? I mean, I think that the key point there is that 60% of your loan for forgiveness request has to be towards payroll costs. I mean, that's pretty much the rule of thumb that you need to be really thinking about. Is that fair to say?
Yeah, and so going back to that application, what they're doing by taking the amount of payroll costs and dividing by 0.6, you're getting what the total amount could be for forgiveness. In other words, adding the 40% in from the non-payroll costs, what it could be. Because the next line down in that application is line 8, and it says enter the smaller of lines 5, 6, or 7. So it actually is dividing by 0.6 to figure out what could that total amount be, and then you have to put the smallest of the three in there. Yeah, so that is actually accurate, but it does look a little wonky because we're kind of thinking of it from the, well, what's 60% of the loan, but the way that the application is looking at it is kind of from the other's perspective. So.
And just another real quick, if we could maybe take a quick 1 minute or 2 minute kind of reminder of what does the safe harbor really mean. Um, those are the two test points, right? For how many employees did you retain during that cover period, and then how much salary that you reduced.
Correct. Yeah. So forgiveness is forgiveness of everything except if you have a reduction to forgiveness, and that's what you're talking about there. There's two tests, and the first one is full-time equivalent, or as everybody's heard, FTE, employee count, and then the other one is salary or wages, whatever you want to call it, reduction as well. And so those two things are what could reduce your forgiveness. And so the government has said, okay, well, here's the test, here's the rules, here's how you comply, and how we would calculate it. But if you meet either or any of the safe harbor criteria, then don't worry about those reductions. We're going to say that they're not relevant, and we're going to give you full forgiveness anyway. So the safe harbor calculations are quite important if you've had reductions in staff or reductions in wages, or at least they can be quite important depending on if you've been able to bring everybody back or what you're paying them at this point in time. So it's just basically like a get out of jail free card to say, okay, there's no reduction to forgiveness. So.
Cool. Okay, I think we can go on to the next one here.
Okay. So then, new eligibility. So this was something that in the original CARES Act, Section 2302, which is the deferral of employer share of Social Security taxes between deposits from March 27th through December 31, which really means payrolls from March 21st through the end of the year, are able to be deferred. But it specifically said that if you got a PPP loan, you couldn't take advantage of that provision of the CARES Act. And then Treasury came out a month or so later and said, well, you can, but only up until the date that you get forgiveness. Well, again, that seemed to not sit well with Congress, because in the PPPFA they said, yeah, forget that. It's you can leverage that employer Social Security deferral regardless, from the beginning to the end of the year. It doesn't, from the March 27th date through the end of the year, it's fine. So again, that is just another example of a provision inside of the CARES Act that is beneficial to the employer, and by the PPPFA opening it up to those that with the loan, it's another example of, yes, this is getting more favorable to employers, instead of it being just about the employee getting paid and getting back to work, that type of thing. So that program is, can be very helpful. TAG, if you guys will recall, if you sat in any of the last webinar, not only do we have a deferral version where we actually leave the money in your bank account to help with cash flow, et cetera, but we built a tax interest version of this program where if you didn't want to leave the money in your bank account, you didn't want to take that risk, we would collect as normal, we would remit when it was due, and then we would give an interest credit on your invoice for the balances that we're holding prior to the payment date. And so that again just became more expanded. It opened it up for a longer period of time, so it became more valuable than it was even before. So again, another good program within CARES Act that we have access to. Nate, are there any questions on how this works or the particulars? I know we've covered this in the past, and I can spend more time on it. I just don't want to linger on it too
Yeah,
much.
I think this is one that we've beaten up pretty
Okay.
well.
Yeah. So, and then specifically inside of Viper, for any of the clients that are on the call, there's a section under the company menu, company tab called CARES Act, and that's where you make your election. There was two specific things for options designed for clients that have the PPP loan. It's called loan and forgiveness with tax deferral, or loan and forgiveness with tax interest. Those are specifically there. If you picked do nothing as a mechanism to allow you to continue running payroll, I would highly recommend going back and leveraging this program, especially since they extended it through the end of the year with no criteria, no hoops to jump through. So I would definitely update that if I were you. And if you have questions on that, you can ask the payroll team. They know how to do that, as well as you can reach out to me. So not a problem. So guidance, and I've kind of embedded a little bit of this into the conversation at this point, but our first piece is don't rush into a, excuse me, a covered period decision, because you don't have to submit the loan forgiveness application immediately. We've got time, we've got the ability to see what additional changes, guidance, et cetera, that the U.S. Treasury or whoever comes out with, and everything has definitely been getting better and better for the employer as far as utilizing the funds in the best way as an employer, not just for the benefit of the employee. So, the loan forgiveness criteria is getting easier. Clearly, they've added more safe harbor provisions and exceptions to the calculations, and we're going to get to that in a second. But yeah, definitely take your time with it. Don't rush into it.
So one of the questions that we're getting a lot of on that topic is, the interest is it's kind of the questions around the interest and how it is accruing up until you do the loan forgiveness. So does that impact like when they should when you should submit your forgiveness application?
Actually, so that's a very good question. Originally, the references were always to the loan in guidance, and I don't have it here in front of me, and we really should have added it to the slides here, Nate. But just recent guidance clarified that the forgiveness is the loan and the interest. So if there's a portion that's not forgiven, that portion will obviously accrue interest. but that becomes the loan, etc. But for anything that is forgiven, the corresponding interest is forgiven as well.
Yeah,
That's
that,
what the guidance was. So
yep, yep, yep. I
that is a
thought,
great question because it really has been on everybody's mind. So whoever asked that one, thank you for that. It is a great question.
yep. Well, there are several, so everybody pat yourself on the back. So,
Exactly. Exactly. All right. Was that it? Do we want to keep
yep,
going?
yep,
Okay.
no,
Perfect.
keep going.
All right. So, okay. So the exceptions. So these are not technically the safe harbor calculations or the rules around the safe harbor, but they are exceptions to the tests that are the reduction to forgiveness. So they clarified some of those in the first application that came out, and then the PPPFA added additional exceptions. So here I'm going to jump to the one on the right-hand side just because it's really easy to go through. So any employees who during the covered period or alternate covered period were fired for cause, voluntarily resigned, or voluntarily requested a reduction of their hours, those do not count against you. So that will be something that's relevant if you had to let somebody go because you caught them stealing. Well, clearly you're not going to keep the person employed, and that shouldn't count against you. And Congress even realized, yeah, that makes sense. We shouldn't hold that against an employer. So those kind of things. And if somebody left on their own accord, with all the insanity of what's going on, I just I don't even want to be out in the public anymore. I'm just going to stay home. Well, how can that impact you? That type of thing. So they have definitely given us some clarity there. But then the two new ones in particular that were covered in the PPPFA are the Bauer made a good faith written offer to rehire an individual who was employed before February 15th and was unable to hire similarly qualified employees for unfilled positions on or before December 31st. That goes back to that safe harbor date. So what they're saying is, yes, if you get people back hired by December 31st, you qualify under safe harbor. But if you weren't able to, then we've given you some exceptions to the reduction uh, tests. And so it's not going to really count against you anyway. So they really have opened up this a lot. And then the other one is good faith offer, reduction in hours. And then during the covered period, I'm sorry, at the same salary or wages during the covered period, and the employee rejected the offer. Again, it makes total sense that, hey, I had to let people go or I had to lay people off, and while somebody was laid off, perhaps they found another job, or they again want to stay home. At that point, when you're saying, hey, I'm ready to bring you back, and they refuse, then that's not held against you either. So but documenting that information in both of those scenarios is very important. Um, and I think we talk about documentation a little bit later, so I won't get into that right now. But yeah, very important to have the documentation of making the offers to rehire, et cetera. So
So we know that this has been, this has been a challenge for a lot of different companies, kind of going through this. But some are actually kind of flourishing during this time. Is there any complication with adding employees? I mean, does that impact any of these forgiveness amounts at all?
no, actually, it just makes it even easier. You kind of leap that hurdle with ease if you've added. We do have a few clients that I've talked to that last year during some of the testing periods and everything for like the FTE, there were 6 employees, and even though they're a little bit smaller than they were um, earlier this year they're at 15 employees. Well, they're not going to have any issue meeting their FTE calculation because of their size that they've grown. So now growing doesn't hurt you for the calculations. It just makes it a little bit easier to actually adhere or to meet them. So
And then when we're talking about these FTEs, so in the original one, it was more about the number for FTE. Does this kind of change that so that the name of that FTE is now kind of important in order to kind of prove that you're able to, or that you weren't able to retain that employee, or they decided to leave on their own?
Well, when we get to documentation, one of the things, and even the application itself, you do put the information in employee by employee on the tables. So yeah, the specific employee is relevant um, in the sense of the wages more than the FTE part itself. So the FTE really is just kind of a total, but the wages becomes more relevant on an employee by employee basis.
And so if I rehired somebody into a different position that was a lower paying, that would be an impact,
That
even
could,
though
yeah,
right. So they would count towards the FTE head count, right? But the salary amount might, that second part of that safe harbor piece. That's where it could potentially affect your forgiveness amount.
that is correct. Yeah, that is correct. So you could be fine on one test with that employee and be hurt on another test with that employee. That is absolutely true. So, and that's a good example of hiring for a different role because the forgiveness application nor the law itself contemplates anything about position. It just looks at the employee and what their hours were and what their pay is. So,
Cool. All
all
right.
right,
I think we can continue on.
cool. Let's see here. So loan forgiveness application. This is where the rubber meets the road and it gets really fun. Uh, and I do mean that sarcastically. So there are now two versions of the loan forgiveness application. When they originally came out with the forgiveness app, it was just one. It's absolutely stupidly insane and complicated to calculate through. Um, like on the application itself, you really do need to build like a spreadsheet to do all the calculations and craziness, etc. But and this after the PPPFA was passed, we expected that they were gonna revise the application, which they did. Now there wasn't much to really revise other than a few numbers that need to be referenced, but they did. They also that's when they plugged in the difference with the employer portion of the compensation and stuff like that. So that was new to it. But they also introduced an easy application. So it's kind of similar to a 1040 and a 1040 easy. The easy application is beautiful. It's simple. It might take 10 minutes to complete, if that. I mean, it's amazing. But not everybody's going to qualify for the easy application. That's the
Of course
problem.
not. Of course
Yeah, of
not.
course, exactly. And just like the 1040, not everybody qualifies for the 1040. So if you do meet the criteria for the easy, that's going to be glorious and make everybody's life that much simpler. But there is going to be a fair number of employers out there for one reason or another that can't complete the easy, and so the main one is going to have to come into play. Um, and one thing that has come up is the application specifically says for the payroll costs, it talks about payroll costs incurred but paid during the last covered period. So we've had a lot of questions about this, and the application finally answered that. So you don't have to push your payroll early in order to get it into the covered period. So for instance, let's say you're a weekly client and 3 days of the payroll are technically in your covered period, but not the last two. And then by the time I pay it, it's going to definitely be outside of my covered period. What it says is that those costs that are incurred during the covered period, so those 3 days in the example, are eligible for forgiveness as long as they were paid on or before the next regular payroll date. So yes, you could do it early, but you are not required to do it early as long as you pay it on your next regular payroll date. Obviously, I don't expect anybody to be pushing off their next payroll date. So as long as you're paying as normal, then you're good to go. You don't have to jump through any extra hoops. So that is a very significant piece because it eliminates a lot of headache and a lot of work to do multiple payrolls and do all the calculations and everything. And some people, for certain reporting purposes, et cetera, aren't really supposed to do short payrolls, and so it does solve a bunch of problems. So that is a very significant piece that was shared in the applications.
So if they, just a couple real quick
Yep.
questions on that. If a company has two different payrolls, like one for hourly employees and one for salary employees, you don't have to differentiate between the two. It's just whatever that next payroll period is, right? Um,
Correct.
for that,
Exactly. Exactly.
for that employee. Yep.
They, yeah, they don't specifically contemplate how things like a company that has multiple pay frequencies, like if there anything special. There is a box on there that says payroll schedule, and there is one that says other. So I would check that and put in multiple type of thing. But when it comes to the calculations and everything, it doesn't really matter because you're looking at the period of time, not so much what it is payroll by payroll. So yes, for this particular issue, just whatever your next scheduled regular payroll is would be fine. For the application itself, it doesn't really contemplate any detail around that, so it's not a concern.
So if you, can you just real quickly highlight what, what do you have to be in order to qualify for the easy application?
We are actually going to get to that here in a second, if I'm not
Huh,
mistaken, right here.
look at
Great
that. How
question.
about that for a transition?
I think
Wow.
that's what they call in the business a segue, right? Uh, so yes, so what is the qualifications for the easy version? You only have to meet one of these, but you have to be able to at least check one of these three boxes. So self-employed, independent contractor, sole proprietor with no employees. So that makes life very easy there. You did not reduce annual salary or hourly wages of any employee by more than 25% during the period. And you didn't reduce the number of employees or the average paid hours of those employees during that covered period. So that is a very important one. The last one is the one that I think probably confused people more than anything, which was you didn't reduce their salary by more than 25%, and you were unable to operate during a covered period at the same level of business activity due to compliance with the required established or guidance issued. Okay. So that one specifically, and we paraphrase this one a little bit here because the paragraphs are actually quite lengthy, but it references CDC and some other elements that, okay, did you comply with these requirements? And the reality is employers aren't going to know whether or not they complied. They were shut down because the state told them they were shut down. So in guidance that came out 2 days ago, I believe it was, they clarified that. They said if the state shut you down, if you were complying with a state order, the assumption is that the state was complying with the CDC or the Secretary of Health and Human Services, that type of thing. So you qualify. So if your state was shutting you down or your local government was shutting you down and that's why, then yes, you do. So you don't necessarily have to go through and check all the boxes and look to compare. You just have to be able to say, yes, I was shut down and for this reason. So those are the three criteria. Again, you don't have to answer to multiples. It's just one of the three. As long as you can say yes to all, one of those three, then the easy application works just fine. And like I said, it's very easy to take maybe 10 minutes.
So
So
two real quick questions on that. So um, did so in a construction business, what if the owner was the one that shut down the job site? Would that be kind of qualified underneath this?
So then you would need to consider what the CDC guidance was at the time and everything as well. So that would be a little bit more cumbersome because you couldn't just say that, yeah, it was the state that did it. You would have to double check to see if it was in guidance and corresponded to guidance from CDC or Health and Human Services, that type of thing.
Yeah, I mean that one is kind of a weird edge case, but and especially if you were able to once it was opened up and you were able to keep your employees there,
Yeah.
I but I would think that you'd have to just get some of that documentation together in order to kind of prove that. But the other question that I have is, and I think we touched on this on a previous slide, but maybe not. If you terminate an employee for cause, Does that count against you?
No. So yeah, that was covered in an earlier slide about the exceptions to the forgiveness or for the reduction tests. If you terminate an employee for cause, if they resigned on their own, or if they voluntarily ask for a reduction of hours, those three scenarios do not count against you for your reduction calculation. So yeah, terming for cause. Now again, you can term somebody and it not really be for cause, so just make sure it's documented, those type of things. And we're going to get to documentation here in a moment. But so you want to have documentation on it in case anybody came back and raised the question. But at the same rate, yes, if you need to run your business and you need to terminate somebody for cause or what have you, then absolutely that is appropriate to do, and it does not hurt you.
Yep. Cool.
All right, we're gonna keep going.
Let's keep going.
All right, very good. So as we said, documentation, that's the next thing. Again, another little segue here. So things like for payroll documentation, things like your bank account statements, your tax forms, and whether that's through like something that you do on your own or through a company like Tag, and we supply like the application actually says, or equivalent documents from third party vendors, that type of thing. Those are definitely important. Health insurance, premiums or invoices, retirement plans, and contributions, and not just the contributions, but also that they existed prior to February 15th. That's always a good thing to show. For the FTE, again, tax forms that will help validate the information that is being produced. Uh, Unemployment and employee wage reporting, those are just various tax forms. And then the non-payroll documentation is, again, payments for your mortgage interest, your lease or rent, and your utilities, but also specifically the agreements, because part of the requirements is that they existed on or before the 15th of February. So yeah, you can show that you're making payments, but I can promise you, if you want to get the forgiveness application through the lender quickly, one of the things they're going to ask you is for documentation to prove that the lease or the utility existed prior to February 15th. So keep that information together as well. That's all very important. Something that's not on here, and I just realized as I was talking about that last slide, or as we were talking about, termination for cause, making sure that you document your offers of rehiring people, because that needs to be in writing. One of the things that I would do for documentation on that is potentially even send those offers in an email form, because that way it's date stamped, etc. If you just have a piece of paper, was it produced after the fact or what have you, and it's supposed to be in writing. So if you do it via email, then you have much cleaner documentation that it was held or done in writing. So I have copies of that, and I would put all of this stuff onto a jump drive or a CD-ROM, zip drive, something to keep it together, because you're expected to retain the information for 6 years after the loan is repaid. So if that means everything is forgiven and that happens, in another 6 or 9 months, you still have to hold on to this information for 6 years beyond that. If, however, you have anything that's left over that wasn't forgiven, and you've got a 2-year loan or you got a 5-year loan, then you're going to have 5 years plus 6 years. You're going to have 11 years that you have to hold on to this documentation. And I don't know about you, but it's hard to go and find something from 5, 6 years ago, let alone 10 or 11 years ago. So if you keep it all together, put it as one package right now while you have all of it. This is everything that I use to validate, to supply to the bank, etc. Put it in a file, put it in a safe deposit box, put it on your server somewhere, do something with it that it's easy to pull everything back, so you don't have to spend the time to locate the information 10 years after the fact, because they can, and possibly will look at every one of these applications, even if you are under 2 million. The assumption is if it's under 2 million, you did it in good faith and everything is fine. But that doesn't mean that they can't and or won't look at any random um, loan in forgiveness. So do yourself a favor, make sure you don't get caught by some gotcha 5 years from now, and make sure you have all that documentation together. Your terminations and all of that stuff. So very important.
So
Um,
do you, for the like the non-payroll stuff, so do you actually have to have like the actual invoice and proof of payment, or can it be just from like P&L? Like,
Yeah, so I think when it comes to the non-payroll stuff, like your lease payments, et cetera, again, you're going to have bank accounts. So having that bank statements from above anyway, so having that and identifying where the money came out, if it was like an automatic payment or something, just making reference that, okay, here's the validation, here's the proof that the payment was made. It doesn't necessarily have to be a cleared check because in our world today, we don't necessarily do that. But having something that documents, yeah, here's where it came out and here was the date that it came out, month of, May, the month of June, et cetera, et cetera. And this is why I can use that for a non-payroll expense. So just something with the information. It doesn't necessarily have to be a copy of a paper check or a clear check or anything.
cool.
Um, one thing that I did say, hey, are we going to get back to that? Was the change from the 2 years to 5 years for the loan? I realized we did not have a slide about that,
Yeah.
so I'm going to touch on that real quick. So yeah, one of the first things that came out was that okay in the PPPFA is that okay from this point forward, all the loans are going to be 5-year loans. They're not going to be 2-year loans anymore. And so that, if you got your loan prior, though, they said, but the employer and the lender, the business and the lender can mutually agree to change their loan from a 2-year loan to a 5-year loan. And everybody kind of got excited by that. But at the same rate, it's a 1% loan. Most banks are not going to be overly excited about extending a 1% loan for another 3 years on their books because that's not a very profitable loan for them. They'd rather get that money back and then re-lend it out at 6 and 7% down the road. So I'm sure banks will do it for the image and for customer service and stuff like that. But if you have a bank that doesn't want to, it wouldn't surprise me at all that they aren't jumping for joy that they get to change a 2-year loan to a 5-year loan. So kind of keep that in mind. Let's see. Any other questions out there, Nate, right now?
Yeah, there's some questions around the the contribution, the benefits amount or the benefits that count towards compensation or towards the payroll. So can
Okay.
you kind of go over,
Yep.
what specifically and whether it's the employee and the employer or just the employer, if you can kind of go through what benefits are counted towards compensation or towards
Yeah,
payroll.
fair enough. So in the original law, it was very vague. And of course, anytime it's vague, you always, try to go in your favor. And so we said the total premiums and we said all benefits, et cetera, et cetera. And we were trying to leverage that as much as possible. The application was the first place that really clearly defined it. The application very clearly says health insurance premiums, not benefit premiums. And so that became something much more clearly defined. And then also specifically, it said the employer portion, which again, the original law did not say. So at this point, our understanding, and I don't think it's just my interpretation, I think it's pretty clear at this point. The understanding would be it is health insurance, only the employer portion. So if you pay 50% of the employee, it's $500. Well, you get to include $250. Now that is not considered part of compensation, but that is included in payroll costs. So just keep that in mind. So it does not get factored into the compensation calculation.
So would that be included in the non-payroll
No, it's
or
not considered. It's not non-payroll. It's still considered payroll cost, but there's
okay.
there's 4 things that equal what the total payroll costs are. One is compensation, one is the benefits, which now is health insurance, one is employer contributions to retirement plans, which was also much more clearly defined in the application. And then the last one is state or local employer taxes. So like unemployment here in Arizona, we don't have any local taxes, but state unemployment would be considered part of payroll costs. So it's part of payroll costs, but it is not part of compensation.
Gotcha. So things like workers' compensation insurance, that would not be included in this.
Nope, workers' comp is not included. The employer portion or the employer portion of any other taxes are not included. Any other benefits are not included, and like a third-party processing service fees, like tag service fees, are not included. So those are all, oddly enough, not considered part of payroll costs.
But for those construction companies that are working on prevailing wages, on prevailing wage jobs, any benefits that they pay from a prevailing wage standpoint, depending on if it goes to health insurance or a retirement or pension, those amounts would qualify.
Yes. Yeah, so employer contributions to health insurance or a retirement plan are part of payroll costs, not compensation, but payroll costs. Yes.
Right. And then, and just to kind of clarify, there's quite a few questions around this. We do have a resource both within Viper, and if you're a client, if you go to the resource area under Corona, we do have resources that outline everything that can be included in that payroll cost. If you're not a client, if you go to ebacon.com /Corona, Corona resource, you will be able to get that exact same information. So we have and we can send that out in an email. We'll link it in an email to everyone after this. That really kind of goes into detail on what can and cannot be included in that.
Perfect. Yeah, for anybody that hasn't explored our Corona Resources page, the tab inside of Viper, I would highly recommend that you do it. There's a lot of information, not just about PPP and loan forgiveness and applications and everything, but just all the insanity that is COVID. So going back to the sick pay rules and HR aspects, et cetera, there's a lot of information in there. So yeah, that's a great resource.
Cool.
All right.
All right, I think we can go on to the next one.
All right. Let's move along here. So now we're talking about how are we helping our clients. So obviously we have built in a lot of automation, and I know a bunch of folks have already seen this or utilized this. So like the C19 sick pay codes that we have in the system, it has limits. It has the sick pay tax credit that gets paid back to the employer, credited back to the employer right in the payroll. So you don't even have to wait to the end of the quarter to get the funds back, et cetera. So there's a lot of automation around that. Also, the loan in the original documents that we did for obtaining a loan, which, by the way, I will throw this out there. The last date to get a loan approved is June 30th. So if there's anybody in the audience that has not actually submitted their application yet, you can do it, but don't do it on June 30th and expect to get approved, because it has to be approved by June 30th. So you need to complete that today, tomorrow, this weekend, or something at the absolute latest. And I would probably say before the weekend, so that you can get in before that deadline. And there's, again, an SBA summary or loan summary report that we built. And then we've had a lot of folks ask us, are we going to do similar reports for the forgiveness? And originally the thought was, yeah, we're going to do similar reports for forgiveness. And then once we got the application and we saw the complexity and the insanity that was going to ensue as a result of that, because even if we give you the information, they're going to have to plug it into pretty crazy spreadsheets to do the calculations and comparisons. We announced, I don't know, about a month or so ago in an email that we will actually be producing the actual forgiveness application. So that raises some questions like, well, what if we can qualify for the EZ application, et cetera? We're going to have an interface for that. And what about information that we don't know? Most everything is in Viper because so much is payroll related, but there's a few things that are outside of Viper that are not included in Viper, like your rent or utilities as an example. We'll have an interface screen to capture that information, and then that way we'll be able to produce a PDF of the full application out of Viper, and it'll be able to be stored there. And of course, you'll be able to download it, do whatever you need. If your bank will accept a PDF, that's great. You'd be able to forward that right on to them. If they don't, and you have to use, let's say, a portal, which again would not be a huge shock for me, then what you would have to do is take the application that we produce for you and just lift that data from the application right into the portal, and you should be good to go there. But the intention fully is to make this as easy on everybody as possible. Unfortunately, it's only a one-time thing, so there's a bunch of work here to get it going or get it in production, and it's not something you're going to be able to leverage on an ongoing basis. But at the same rate, there's so much that relies on this and so much that's hanging on it, and it's just such a crazy set of calculations and comparisons that we want to make sure that it's done properly for you. You guys don't have to struggle and waste a lot of time, and so we're putting that in. The intention is to probably have it done and online by the end of July. I don't want to promise anything. This is not a promise. I'm telling everybody right now, this is not a promise. Nate, you heard me say this is not a
I'm
promise.
pretty sure Alex heard that you said that this was a promise.
Yeah, Alex heard that I promised exactly. So, um, and again, we're trying to get it online as quickly as possible, but at the same rate, we also know there isn't a huge urgent need for it as far as being able to push it out the door, immediately. The old deadline was kind of for the safe harbor was the June 30th, so we were shooting for July sometime. And now with these changes, it might push it back. So I just want everybody to know that we are working on it and we will get it out. And once we do, like all the other wonderful blog posts and emails that you get from me, we will make the announcement out to everybody because that one is very significant. Also, the payroll tax deferment, the deferment or the tax deferral or tax interest selections inside of Viper is something else that we've done to automate things and have that impact you immediately. Which, by the way, is one of the reasons I did send out that blog a couple weeks ago about the 7200 form 7200. You do not need to file that. We are doing it all embedded in Viper. So if you did file a form 7200, please contact our tax team because there's a bunch of things we're going to need to do to kind of unwind or fix that complication. Most people I don't expect did file one, and because again, we're doing all of that for you. So the deferment is happening in there. And then the employee retention credit, which up to this point, if you got a PPP loan, the retention credit really isn't relevant to you. But, and I think the next slide. So I'm going to jump to the next slide real quick here. Future legislation to keep an eye on. There are 3 in particular bills that are in either the House or the Senate right now. All of them are in committee and probably won't get really looked at until after the July 4th recess. But if they do pass 1 or 2 of them in particular, it is going to have a very significant impact on your ability or the employee retention credit for clients that already have the PPP loan. So again, we don't know how sure they are to pass, but at the same rate, understand that we are paying attention to that. And if that does come into play, that's going to require some new programming in the system, but it will also open up a bunch of additional benefits for clients to take advantage of the CARES Act and whatnot. So we are definitely paying attention to that, and we'll be announcing it if something comes to light or comes into play that affects everybody. So just know that we're on that.
Yeah, just real quick on some of that.
Okay.
Well, just go right into the questions. That's fine. So you know, I think the big thing to really understand on some of that legislation that's coming up is, you know, the original CARES Act. You had to kind of pick a lane, and once you went down that lane, then you didn't really have opportunities for others. And I think, you know, when we kind of kicked off this whole you know, this whole seminar with kind of what was the intent of the original laws, and I think what they're seeing is that, you know, kind of throughout this whole you know, pandemic, that they're going to have to take a little bit more of a long-term approach to this. And so blending a lot of those programs, I think, is really kind of the theme of a lot of what's coming down the pipe.
Yeah.
And so if you're kind of in one of those scenarios where, hey, I've already gone through all of my PPP money, what's next? Um, you know, there could be some opportunities here over the next, you know, few weeks to months that allow you to continue to get some other breaks and other opportunities for benefits. So
Yeah.
um, you know, there is definitely some things in the works, I should say, that if
No, you're definitely right there, Nate. Again, things have changed. The legislation, not only the what's already been passed, but the things that are on the table are definitely keep going that same direction, like we discussed. You were 100% on point there. I don't want to get into the details of it, but yes, you are right that there's definitely some possible opportunity to really help even those that already got the PPP further in the future here. So that's why it is so important that we stay on top of it and pay attention to it and communicate once we know what's going on. So
um, cool. So just to kind of clean up, we do have some extra questions out there.
okay.
Um, so as far as compensation goes, how are commissions and bonuses handled?
So commissions and bonuses are part of compensation as normal. The commissions obviously are probably the easier one to deal with because it's very specifically tied to something that they've either already been getting and or work and you know it's pretty well defined. Bonuses, if it's part of your normal operation, you know, customary, etc., I think that one's pretty straightforward. Where you could potentially run into problems if you wind up bonusing out and I'm going to use the term ridiculous bonuses that aren't typical. So, for instance, every year you give bonuses of $3,000 and $5,000, and you did that this year or whatever. Okay, that's fine. That's appropriate. That's part of their compensation, and you can use historical evidence to validate. Yeah, this is not unusual. This is not anything special. But if you've never done bonuses or you have done bonuses and they're 3 to 5,000 and you start paying people out, you know, $20,000 bonuses or what have you, that's going to probably raise some red flags. Now, could it get through? Sure. I can't promise you that it will be a problem. Um, and I can't say that, you know, that we wouldn't get approval for forgiveness because, again, it's not by definition not allowed. I mean, you can give bonuses. There's nothing. But if it raises questions, if the bank starts to come back and look at it and they either approve or, you know, or don't want to approve it or whatever. So just pay attention for the impact that it might have on the process, your approval, et cetera, et cetera. But can you do it? Absolutely. I wouldn't suggest not to give a bonus out if you are already and historically have been giving those bonuses. That's not a problem.
Yeah, and I would just say, kind of just for additional kind of clarification on that, I think you know, in the guidance when they kind of talked about this even specifically, but it was really around owners giving themselves bonus versus
Fair
the
enough.
employees. So I think, you know, if it's kind of part of your regular compensation to your employees, then you're probably pretty good. Again, kind of to like what Jason said, if you can kind of show historically, hey, this is what we did, and if you do a bonus to get somebody back up to their original,
Yeah.
to their original payment amount, that's perfectly fine as well.
Yeah. No, that's a good point. Yeah.
That's
Um,
encouraged.
and you can even define that kind of stuff as like hazard pay or whatever else. I mean, that's totally appropriate. You need to run your business. If it's to run your business and it's justifiable and rational and reasonable, et cetera, I don't think you have really much of an issue. If it's again just something that's out of the blue and seems totally unfounded, that's where you start to have a question. So, and you're right about the owners definitely are more of a concern, but at the same rate, since owner compensation now is specifically tied to 2019, it does you no good or helps you in no way to do a bonus to try to use some funds up of the PPP or anything like that because it doesn't help anything there.
Cool. Okay, so if you submit prior to greater than 8 weeks, but prior to 24 weeks for your covered period, does that prorate the amount that you can the maximum amount uh, of payroll costs that can be eligible for forgiveness?
Um, So greater than 8 weeks, but less than the 24.
Yeah, so
Yes. So you wouldn't be able to
I'm doing it
say
for yeah.
$40,000 for somebody when I only use 14 weeks of the equivalency. That would be a correct statement. Yes.
Okay, awesome. We have a lot of kind of client-specific questions here. So, if we had chosen to kind of do nothing on the tax referrals right now, are we able to? Are clients able to kind of change that to defer taxes going forward?
Yes. In fact, I specifically have a charge to reach out to folks. So this is a nice little venue for me here. But we're just not big fans of doing nothing. It just seems like clients are throwing away an opportunity, so to speak, to leverage that provision of the CARES Act. And so, yes, the inside of Viper, inside of that window, that screen, if you elect to do nothing, you can make that change. The ones that you couldn't make a change are once you pick something like loan and forgiveness with tax, interest, or retention credit with tax deferral. Those you can't because, again, at least up to this point, you can't commingle those two programs, the uh, employee retention credit as well, and the PPP. So we did put some locks on it, but if you elect to do nothing, you can make that change anytime. That's not a problem, and we would highly encourage, should I say.
Awesome. So when we look at the the total compensation, is that so that 25% kind of safe harbor amount?
Okay.
Is that across the entire covered period, or is it an average across the covered period? Is it a total amount across the covered period? How does that? How does
That's
that
a
calculate?
really good question, and that's one of the very confusing, frustrating calculations inside of the system. If you're looking at a salary person, you're looking at actually what their wages were paid during that period of time. If you're looking at an hourly person, you're looking at their average hourly rate. There is a little bit of a question around overtime and how that factors in. But since overtime, is time and a half only on those hours that are overtime, your average hourly rate probably is not really out of character in those first uh, in the testing period, the Q1. So you're probably fine anyway. There is certainly an argument that could be made that the the intention of the law is, hey, somebody was making 15 or $20 an hour and I'm still paying them $20 an hour, even though they don't have any overtime, which in the past they did. So I back that out, et cetera, et cetera. So there's definitely some arguments that could be made there. But yeah, that is one of the frustrating, annoying aspects of the application is how to calculate that. But essentially, the two work a little differently, the hourly versus salary. Does that answer the question, you think? If I didn't answer it fully, maybe shoot something back in, or you're welcome to even reach out to me directly afterwards. So I don't want you to feel like I didn't answer you, but I think that that's the answer.
Hmm. So we got a lot of suggestions for us. um, and I think this kind of comes into, kind of what we do for our clients. So, I think the biggest thing is, how do we help clients, or, what are some of the things that we have planned in order to help our clients know, hey, you know, you're this is the loan amount that you have. Here's what your current payroll costs are that are eligible for forgiveness. Like, do we have anything in the plans to let clients know that, hey, they're getting close to using up their eligibility amount?
Got it. So off the top of my head, the only thing I can say in particular is the application itself, obviously does that, right? Or it kind of requires us to do that. So as we get through that application further and we get that in production, it will do those kind of things for you and answer that. But as far as a producing just a report separately, et cetera, we don't have a specific report that we're outlining or that we're anticipating putting into production because of the direction that we're going with the application. We did, however, modify that the original SBA loan summary report to calculate the FTE uh, count the way that the application is looking for it now. We were originally using a quarter of a person. The application is using to a tenth of a person. And then also we did update, like I said earlier, our original assumption or interpretation of the CARES Act was we could use all benefits, et cetera, et cetera. We cleaned that up in correspondence with the guidance that we got through the application and made sure that it's only reflecting the wages, et cetera, or I'm sorry, the health insurance premium as well as just the employer portion of that. So those reports are cleaned up. So I guess you can manually get there yourself, and I use manually because there would still be a little bit of requirement to take data from either the SBA summary payroll register or those SBA that loan summary reports uh, and look at what those numbers look like. All the information's there. It's just not built into a specific report. We're building that into the application. So I don't know if that's really a good answer, but that's the direction that we've chosen to go is
No,
to
and I think the key piece there is that, what we're trying to help with our clients is, we're trying to be, um, you know, I guess a half a step behind, any guidance that comes out. And so anytime that we are receiving the guidance, we're looking through kind of the systems that we've built around, the entire CARES Act and all the related, you know, laws that are coming out after the fact, to really simplify it. Like, we've made changes based off of the original, where it was very vague, and it said, you know, you could interpret it to say it included, employee contributions to health insurance, and as well as employer. Well, they came out with clarification that it's employer only. We made those
correct.
adjustments.
Yeah,
And so, I think the key piece is, you know, we can, we're going to stay on top of this. And we're going to try to expose, I think, as much as we can to, just to be, not only just for transparency standpoint, but hopefully to resolve any confusion. And what I would say is that, if you're still kind of confused in anything, that's why Jason's here.
Oh, you sound like Jack now. Thank you.
Yeah, somebody's got to play that role.
Yeah, does corona at tagpay.com still point to my email?
It does, but that's where you can reach out, and we'll be able to do that. We do have a couple other questions here. Um, as this thing goes down, and this is, we kind of touched on this, as this kind of continues on, and we're seeing some escalating cases, across the U.S. You know, people are, worried about another shutdown, and worried about additional restrictions. What's kind of your thought, your finger on the pulse of what kind of happens next?
Well, I mean, yeah, there's there's questions spanning all of that. I mean, I personally had thought just with my kids in school, I'm like, yeah, I'm waiting for the state of Arizona to say, well, school's going to open again, but we're not going to actually have, school in the building. It's going to be the way that we ended last year, and so I'm just waiting for that to happen. Um, as it continues, I think it probably has to do with what is the impact? In other words, if it's in a few states, if it, that are escalating and it's somewhat, and I don't want to say contained, but only in those areas, but the majority of the country is doing fine, or seeing decreases and operating normal, I think we're less likely to see a massive bit of legislation from the government, or mandating something from the government about a shutdown across the country, or a bill that or a law that applies to the whole country, that type of thing. If we're starting to see Arizona's increases, just be one of many, many, and I know we probably got about a dozen or so states right now that seem to be going up, uh, far heavier than they were at one point. Um, then, but it starts to get back into New York again, and other states, etc., and we're seeing it across the country. I think obviously we're more likely to see something on a national basis and whatnot. The legislation that is out there, as you kind of alluded to earlier, Nate, clearly has some elements in it that are to help employers, employees, et cetera, in the future. Even if you went down the path of a PPP or whatever originally, there's not an escape hatch, but there's a tunnel over to another program and that type of thing. So all of that, obviously, I can't tell you what's going on in the government, but all of that, will come out in the future. I will say that from what I've heard, we're likely not to see any new legislation really passed regarding this stuff, in particular, PPP or CARES or whatever, until after the July 4th recess, and which would put it late July, kind of at the earliest. So I don't think we're going to see new legislation. Again, I do believe we'll see continued guidance on what we have between now and then, but I don't think we're going to see probably new legislation until another month or so out. And obviously, what we see in the society and communities, et cetera, will play a big part of the Congress's interest in doing something or not doing something. So uh, there's there's likely going to be more. I mean, from what we're seeing so far, there's likely going to be something, but what it looks like and when it finally gets to that point might be very different than what we're even seeing, out there today. So it's way too early to predict some of that future stuff.
Cool. I think that's it. That's really all for questions right now. I'd really like to thank everybody, for the questions and interaction. I think it's definitely made it, um, a little bit. It's definitely fun for us. I'll speak for myself here, I guess, Jason. But having a little bit more interaction rather than waiting for questions to the end definitely makes it more fun to do these. Hopefully, you have the information that you need in order to make decisions in your business. If you are a tag client and you have any questions, again, please feel free to reach out to us. You can email us at corona@tagpay.com or reach out to your CSR. And if you're not a client and kind of interested in what we're doing, please feel free to reach out to us. You can actually use that exact same email, corona@tagpay.com, and we will have someone reach out to you. Jason, any last words?
No, again, the only thing I would say is I agree with you. I like this format a little bit better. It seemed to go a little more smoothly, and I think the redundancies of questions probably didn't happen as extreme as what we've seen in the past because they were being asked and answered, more timely, and so other people were hearing that and like, oh, I don't have to ask that question then because it's already being answered. So I like that. I think we'll probably stick closer to this format going forward. Like I said, I'm sure, especially if any new legislation happens, that we're going to do more of these. I know, Nate, you and I have talked about doing more of this type of training and education just for Viper as a whole. So clients can kind of look for these in the future. Obviously, we have a very specific topic at hand right now with everything going on with COVID, but in the future, we're going to continue them as well. Hopefully they're valuable for folks, and as long as we get people signing up and attending, then we'll keep doing them. And like Nate said, whether you go to corona@tagpay.com or jason@tagpay.com, it's going to come to me anyway, so I'm here to help out. It seems like after we do each one of these, Nate, I get a little busy for a little while and I say a little and laugh because it's a lot busy. So if you do reach out to me and I don't get back to you for a few hours, I apologize right now. But I am definitely trying to get back to everybody as quickly as possible, and I will definitely get back to you. I promise that. So thank you very much.
All right. Thanks, everybody.
Take care. Bye-bye.